let's get talking to our first corporate lined up on the show. We have Mr. Sanjay Arya, the Executive Director of United Bank of India, who's joining in this morning. Hi, Mr. Arya. Thank you very much for joining in today. There was some exclusive details that CNBC TV18 was picking up where the RBI has written to the Finance Ministry asking for greater bank recapitalization for FY16 as opposed to the 7,940 crores that is already lined out by the Finance Ministry for this year. Can you tell us if you know what your capitalization needs are for FY16 and how much you would have to approach the government for if that be the case?
In fact, our credit growth that we have planned for this year is at a modest 10% growth this year, and we don't need much of the capital. We are planning to approach the Government of India for some additional tier 1 capital, maybe in the form of PNCPS or AT1, because we already have 82% of the capital infusion by the government, so we don't envisage much capital infusion so far as the equity infusion is concerned.
Okay, and how much would you approach the government for?
Yeah, maybe that we are actually in discussion, and then we will be talking to the Finance Ministry, and then we will decide about that.
Hi, Mr. Arya. Thanks so much.
As I have already told you, our capital. Yeah.
Go ahead,
Thank
sir.
you. But our capital requirement is not much this year because our internal generation, we are actually concentrating more on the internal generation of resources as well as recovery, which will actually give us good return. So we are planning to generate resources internally also, and we will approach the market as well. And for the balance requirement, we will be approaching Government of India.
All right. Hi, Ms. Arya. Thanks so much for joining in. Well, give us some outlook in terms of what's the credit growth that you're expecting for this year. And also, we have seen a big improvement in your asset quality in the last 1 year approximately. Your net NPAs are still at around 6%, but do you think you can get better from there?
See, if you talk in percentage terms, always there is a distortion because percentage is always a factor of two variables. So far as gross amount is concerned, the absolute amount of NPAs, this is one of the very few banks in the industry which has been able to curtail its NPA level drastically. In fact, I may tell you that as on December 2013, our gross NPA were 8,546 crores. And now after 1.5 years, it has come down to 6,553 crores in March 2015. That means a reduction of 25% in the gross NPA level. We had undertaken very aggressive recovery drive. We had actually followed up all the borrowers to prevent further slippages, which has resulted into this improvement in the asset quality. Our gross NPA has come down by 25% in last 1 year and a quarter. So that way a lot of improvement is there. In fact, in percentage terms also, the NPA, gross NPA percentage has reduced from 11.2%
Sir, that
to
point is taken, sir.
now.
Sir, that point is taken. Can you just apprise us of what your slippages as well as your fresh restructuring was in the quarter gone by, because we don't have those details with us, and what is your guidance for the coming fiscal, sir?
For the full year, the slippages were to the extent of 4,000 crores, and we had actually recovered 4,600 crores. That way, we have been able to reduce in this financial year the gross NPA level to the extent of about 600 crores. Further guidance so far as our position is concerned, I don't foresee large-scale slippages because whatever slippages had happened, these occurred in case of the large corporates. And the smaller accounts we have been able to maintain. We have been able to curtail these slippages, as well as we had undertaken very aggressive recovery drive. So we have been able to manage our asset quality very well so far as smaller accounts are concerned. So far as large corporate accounts are there, it is actually a consortium is actually taking the decision, and we are also a part of the discussion, and we are talking to the borrowers. We are also following up individually with the borrowers. But these large accounts, some economy issues are also there, some issues of the demands are there, and but the pipeline, I don't think much of the pipeline is left, because majority, I think they have already slipped, and we feel that the NPA position would be more stable from now on.
Okay, sir, you spoke about specific accounts, and I know you might be a little apprehensive to talk about this, but we do understand with our past interactions with the United Bank that you do have exposure to JP Associates, and at some point there might have been a niggling concern with regards to that account. Can you just apprise us of what your total holding is at this point, or total exposure to JP Associates Group is, and whether or not there might have been any sort of niggling worries which still persist?
No, in case of individual accounts, it would be difficult for me to tell you in detail. But then I would tell you that exposure is not much. It is moderate exposure. And we are following up with the party, and I think that the asset quality we will be able to maintain.
All right, Mr. Arya, you were mentioning earlier that you require a very small part in terms of capital infusion for this year, and there's that big meeting that's scheduled for later this week. If in fact you don't get any of that funding, will your balance sheet contract? How would you manage going ahead?
No, there is no question of contracting the balance sheet, because last 1 year there was no great expansion. Now we are getting some good proposals also. But only thing is that we are very careful about expansion, and we are making ourselves sure that the asset quality we are entering into is of good quality. That is why we have kept a moderate target for our expansion, and majority of the expansion would happen in the area of retail and also in MSE. So we are not entering into the large corporates in a very big way, and that is why we have set a moderate target for us, and we will be able to manage, and there would be a growth. Now the days of contractions, that would not happen, because RBI restrictions which were imposed last year, they have all been taken away, and now the bank is now free and working as any other bank.
Sir, just running out of time, so last quick question then. What is your expectations from the meeting with the Finance Ministry, and any specific data points that United Bank would possibly look to bring up or talk about?
Actually, we will be talking about the in general, because industry-specific issues can be talked about, like the way in which the capital infusion is to be allocated among different banks. We feel that the ROA, ROE may not be the best way, or maybe a mean of the ROA. What is the mean ROA of the public sector banks? That may not be the best way of deciding the capital allocation between the different ways. We will be discussing with them all these issues.
All right, Mr. Arya, thanks so much for joining in this morning and giving us all those details. All the best for the year ahead.